Hello, everyone. It's Josh Hayes with Hedge Plus with the Market Monitor for Thursday, December 18th. I quickly want to go over what's been happening with China. Obviously, at the end of October, when word got out that China was going to be agreeing to purchase soybeans both for the remainder of this year and the next 3 years, that led to the rally that we got. There was initial reports by our own government indicating that the soybeans would be bought by the end of this year, the 12 million metric tons. That led to the rally, which we saw. And then we started to come down when there was more doubt about when China was going to buy, if they were even going to buy. And what's essentially happened now, and that all that doubt and all that downturn in the market, there's estimates that if China isn't already completed with the purchases that were now apparently allowed to happen all the way up until the end of February, they're probably going to do it real soon. So in the end, they probably are going to have bought what they agreed to buy before the end of this year, but that's not exactly helping the market too much. And the reason is because we rallied so high so quickly and got so expensive compared to South America, we haven't made any sales to any other countries basically throughout November and most of December. The prices are starting to come back together. We're once again more competitive, but now we've essentially gotten the Chinese purchases, but not any current benefit from right now. So where the hope rests is that now that our price is back down, hopefully we'll begin to see some buying from some of the other countries. And also, hopefully with what China has purchased, the ending stocks numbers will look a little bit better. But there's no doubt irreversible damage has been done, because we could have had all the purchases that China made on top of a more gradual price increase and kept selling to some of the other countries we've sold throughout the year. Maybe all this damage wouldn't have been done. So hopefully our government learned a little bit of a lesson, such as like our Treasury Secretary or Agricultural Secretary, and some of the things they say and how that can impact the markets. But obviously, we're hoping that we level up here. A lot of speculative trade came in when the announcements first came out that China was going to be buying. And unfortunately, when the reverse started to happen, those same speculators trading on technicals, we had a gap to fill. Gaps don't always have to be filled, but when there's all these new traders involved, like in this instance, I guess it was just bound to happen that we had to fill this technical gap. So we're back down to that level late October where we were, and hopefully we're bottoming out from here. Moving on to the weather. Livestock stress possible in Northern Plains area with some cold weather and winter storms there. Mostly good conditions in China. I always want to emphasize Brazil and Argentina. In Brazil, they are getting rain, so no issues there. Started to get a little too dry in Argentina, but they've picked up some rain. So as of right now, there's really not much to look at that is on the verge of happening in South America. So I think that's obviously part of the downturn we've gotten there as well. Taking a look at international cash prices, we see that corn, we remain very competitive. That should help. We've also had another record week of ethanol production. So when we get the January report from USDA, we should expect to see demand very strong. If we get some yield reduction from USDA on corn and corn acres, we'll probably be in a pretty darn good place, something we fully expect. I can see, even though we've come down quite a bit with soybeans, Brazil is still considerably below us. Argentina not reporting a price right now. I don't think Argentina has a lot left to spare to sell. And moving on to wheat, things have definitely tightened up there. We're starting to see Russia exporting. They had a month of November, they exported more than they did. It was the first month this year that they exported more wheat than they had the year prior. So this also would suggest, seeing how much we've narrowed the gap between ourselves and the Black Sea region, Russia and the Baltic states, hopefully we're starting to bottom out with wheat as well. That'll be all for this week. Talk to you guys again next week. And like I said, there's quite a few indicators that the market's bottoming out. Those who either had buyback positions on and stuck with them, we should start to see those pay off soon. And for those who didn't, this is basically another opportunity to get back in. All right. Talk to you guys next week. Take care. Bye-bye.